Hi everyone, welcome to Token Topics. Stellar XLM is the topic of this video. We're going to dive into some latest developments and some exciting news going on with Stellar. Denelle Dixon is a woman of honor. We're going to look into that. We're also going to go over highlights from last quarter, and we're going to hear words from one of Stellar's prominent partners, Arf. Hopefully this video would give us an idea of where this technology is headed and where we currently are at. If you're a Stellar XLM fan, you don't want to miss this. If you do enjoy the content, consider subscribing. I'm not paid for or sponsored by Stellar. Let's go ahead and dive in. Congratulations to our Lady of Honor, Denelle Dixon, for being part of Forbes 50 over 50. She took to Twitter to tweet out, "Grateful for the Forbes 50 over 50 nod. Proud to be a champion of women in blockchain alongside an incredible list of founders and innovators." And the article goes over some key highlights. You can read it yourself. But Denelle Dixon joined the Stellar Development Foundation as CEO and Executive Director in May 2019. Also under her leadership, the SDF it rolled out its first-of-a-kind global on- and off-ramp service for digital wallets. She also led the Stellar Aid Assist, a new aid disbursement system that is used by the United Nations. Also, Ukraine government is working with the SDF to create a CBDC, and Dixon is the first in her family to go to college. Now at 53, she believes that working on newer technology like blockchain is a strength. Now, we know that Ripple's recent ruling against the SEC was an important milestone for crypto. Ripple and Stellar both have been pushing the landscape for regulatory clarity. Stellar has appeared numerous times in Washington and continues to pursue the fight for regulatory certainty here in the United States. Now, let's get an understanding of how Stellar views the recent Ripple victory against the SEC, and does this give us a bit of clarity?
About the Ripple ruling, the recent ruling, and how this impacts Stellar in any way. Denelle, do you want to take this one?
Yeah, I think more importantly, not just Stellar, I want to talk a little bit about how it impacts the industry. I think that what we've been waiting for in the industry, and frankly, what even lawmakers have been waiting for in the US and abroad, is some clarity around things. And we've had a lot of activity with respect to the SEC in the US, and that's created, I think, some confusion on a global basis about how to view these kinds of digital assets. And I think the most important thing about that ruling is the fact that it was very clear that a digital asset in and of itself, just the digital asset, is not a security. There has to be more that can turn it into a security, and clearly you can do. Like you can transform this digital asset into a security if there's investment contracts and things that you pull together to be able to make it so. But the digital asset itself is not. That is just a huge, huge piece of clarity to have in this ecosystem and in this industry, not just domestically, but also internationally. So I think that the ruling is it's very articulate, it's very clear. And I think the steps with which the judge, with Judge Torres, went through the analysis was really awesome for the kind of things that we need to see here. I think it actually is going to impact even some of the legislation that was being talked about and discussed here in the US. And that was market structure legislation. And so I think that for Stellar, for any layer one out there, for anyone building in this ecosystem, it's just really important to have that kind of clarity and to be able to leverage the seriousness with which the judge approached it, but also the stability, to create that stability in the ecosystem. So really important for us to have that. It's something that many of us believed for a long time, that the asset, a digital asset in and of itself, is not a security. And so being able to see that in writing in a really important decision was something that I think transforms a lot of the discussions around these kinds of issues about security versus commodity.
In just a moment, we're going to hear from one of the co-founders of Arf, so we have a better understanding of what is currently going on with this partnership and more. Now, I've gone over Arf before on the channel, but just to recap, Arf is a global settlements banking platform eliminating the capital-intensive business model of cross-border payments industry by offering digital asset-based working capital and settlement services with native on-ramp and off-ramp capabilities to license money service businesses and financial institutions. Arf serves as a regulated, big keyword right there, regulated strategic partner for e-wallets, neobanks, FX providers, digital remittance companies, and payment companies. So big time right there. And the challenge, as payment technologies grow, more sophisticated customers expect cross-border payments to be faster, cheaper, and smoother than ever. However, the money service business responsible for facilitating these cross-border payments are constrained by traditional correspondent banking infrastructure and by limited access to liquidity. Is that not what we always hear? Interoperability is key. What sets Stellar Network apart from other blockchains is its interoperability. Stellar can interoperate with other blockchains and traditional financial infrastructure via regulated financial institutions called anchors. Anchors can issue assets and or provide on and off ramps onto the Stellar network. Arf has seen remarkable demand for its services and has ambitious plans for expansion. The company is currently operational in 20 countries and planning to add 40 more countries to the roster. In addition, Arf has more than 500 businesses in its membership pipeline, with nearly 200 of them vetted and ready to move forward with licensure and get started using Arf's payment corridors.
And today I have with me Kazim Uzimas, founder of Arf. Arf is a Swiss-regulated global settlement banking platform that uses Stellar to provide short-term liquidity in B2B financing. Kazim, what's up?
Hi, thank you very much for the opportunity, and it was a pleasure actually being here. Well, since 2018, we are trying to build solutions using the digital assets, using proper blockchain platforms to actually enhance traditional finance.
31, which is Stellar's cross-border payments, open specification. SEPs are standard ecosystem proposals, and there are ways for people to define ways to interact with the Stellar network. And so we have a bunch of these, especially around cross-border payments. I am curious, you've integrated with a lot of different networks, a lot of different financial institutions. What is, what are the challenges there, and what's the difference in experience between, different networks and different financial institutions?
Well, from the conceptual point of view, the biggest struggle was approaching things from a network angle and approaching things from a basically working capital provider angle. So these are two separate things, which makes a lot of difference, basically. So especially on the decision maker side, this is a very straightforward thing. And when you provide liquidity, the systems are aligned to open doors for you, basically. Obviously, being in that role has its own challenges, like getting facility, etc. So we are looking to a new kind of financing model for licensed financial institutions. So what are the risks? How are we going to operate? What is the technical infrastructure? For example, Stellar USDC provides the perfect infrastructure for that, right? The settlement time is minimum. Per transaction costs are minimum. So this way, we will be able to openly say that, okay, we can credit even a transaction by even a SEP31 transaction. So on an infrastructure level, the decision metrics is very low. There are only a handful of platforms that you will be able to build on top of these services. So Stellar is the perfect partner here. And at that time, again, Stellar's approach was, we are going to use USDC on Stellar network. You guys designed the protocols, and you know that licensed financial institutions settle among each other with USD. So that's having this initial facility or initial liquidity as USDC, again, is a very nice concept that made our lives much more easier in the end. So we have similar companies, right, providing liquidity to cross-border transfers, but they're native token, for example.
Leads to my next question. I think you mentioned IBM WorldWire being the thing that attracted you to Stellar. So we're talking about probably late 2017, early 2018 here.
Yeah.
It's been a while. How do you feel about the decision of going specifically with Stellar? Have you looked at other networks and compared them? How do you feel about that?
I think the fact didn't change that the protocol interoperability, the openness, the test suite, and the adoption of financial institutions. So Stellar is always there. Basically, Stellar seems like a mandate, right? Opening up, serving licensed financial institutions, providing this infrastructure, open protocols. So it's always there. And we obviously took great benefit of it. The thing we struggled at the most, so again, there are two thought camps, I believe. In worldwide model, basically you have multiple local stablecoins, right? And you have to have some kind of there is an inherent effects, inherent liquidity problem, because there should be necessary liquidity, especially from any currency to any currency, right? Well, our approach was simpler, basically, offloading a lot of intricate, complicated problems. There is no need for market making or providing liquidity for other currencies, basically. We learned a lot of your model, basically. It helped us a lot.
And I think our model has also changed a lot throughout the years, or how we perceive the money movement. I think that in the early days, there was this expectation that, we're going to have every local stablecoin available on the network. So any on and off ramp will be attached to its own stablecoin. And I think what we learned, and then the liquidity will come through the DEX. And what we learned throughout the years is that sometimes there's already liquidity in various off-chain facilities, and people just want to use USDC on-chain settlements or some other currency on-chain, and then do the last mile conversions off-chain. So I think our definitions of what an anchor is have changed throughout the years. It used to be you had to issue your own asset, and today we have interoperable on and off ramps that use assets issued by others. Even if you look at the MoneyGram integration, the actual asset that is being used is USDC. So MoneyGram is an anchor, but they use an asset issued by someone else. So what's going on in ARF right now? What are you working on? What's coming around the corner?
We are very excited, basically. So we are operational for the last 7 months, and our on-chain traffic basically exceeded 300 million.
Oh, wow. That's awesome.
Yeah. So things are really looking well. And we are doing we started with $5 million facility. And because of the nature of our model, we will be able to cycle that capital, obviously, 4.5 times at least a month. So it provides us a lot of flexibility. And when we are working with our customers, for example, there is this payment fitness. We are receiving repayments every day and providing credit lines. So there is this ongoing process, and whole organization is very much focusing on that. So things are looking good. But right now we are understanding that we will be able to expand and build the model. So we have now an automated model that will be able to work with APIs or also with, batch files, you may say. Initially, we can onboard an institution very quickly, basically. We have this risk assessment process. We can onboard them. And then we can start operating right away by using these batch files. And we provide them, obviously, API integration capabilities. So this is what we finished. This is what we built. And secondly, right now we are opening up ourselves to DeFi platforms. So our biggest bottleneck is capital, basically, facility. We have a very nice transparency model. We have very clear risk assessment. Our working model is very simple and observable because it's on-chain. But the facility, right now we have DeFi pools, right? We are looking to the next generation of DeFi lending. So far, no DeFi protocol, even real-world asset-backed ones, utilize the concept of receivables. You have this pool. There are major platforms like Goldfinches, Atlantis, etc. So if you look at the pool, basically there is an institution, borrows the money for 1 to 2 years, pays interest every month, and at the end of the term, they pay the capital back. But right now, the next generation lending protocols are making the receivables visible too. So ARF will be able to open up a pool in next generation protocols, which I'm going to do, which I'm going to go detail this. And now we will be able to withdraw funds, but we will be able to show our activity there. We will be able to create these on-chain receivables, and it's visible. And every liquidity provider will be able to see your performance, if there are late payments, if any defaults. It's very transparent. So this is upcoming.
In its global reach, ARF is looking to make running MSBs easier through new offerings. Recently, it launched a credit line so that MSBs could instantly access traditional working capital credit lines, allowing any quarter to be post-funded in real time and worry less about amassing large amounts of pre-funding capital in the first place. That's Nostro Vostro accounts right there. Arf is also exploring providing debt facility and other competitive advantages for MSBs. Also, MSBs can enjoy same-day settlement, same-day transfer, and greater access to new markets. Next, let's dive into the latest quarterly review to see what's going on with Stellar.
Take a look back at some of the highlights from the quarter. Q2 was all about Storabon in many ways, and Justin will cover the progress on that in detail in just a moment. But in addition to all the exciting work that is moving forward there, we celebrated our 1 year of MoneyGram access in June. That's 1 year of new utility that connects cash and digital assets, addressing the last mile problem for both those in the cash economy as well as those looking to do more with their money. And as we've seen since its launch, it continues to prove its value in new contexts, helping to power solutions like Stellar Aid Assist. And I just have to say, as a side note, it's been so fun to watch the new wallets that are coming on to MoneyGram access and to see the excitement around that as well. Franklin Templeton's on-chain US government money fund, powered by the Stellar network, surpassed 270 million in assets under management as of April and continues to grow. It's up to almost 300 million as of today. Storabon preview releases 9 and 10 were completed since the last quarterly webinar. These set the stage for mainnet launch. Although preview release 10 technically happened after the Q2 cutoff, we're going to talk about it a bit today because what we're doing with it is significant. More on that from Justin in just a bit. Event activations at industry events like Consensus and the Digital Currency Conference presented us with opportunities to make ecosystem activity visible with key audiences. Our 5th annual Meridian Conference is approaching in September, and we've been rolling out registration and program updates. You should make plans to join us there if you haven't already, because you won't want to miss this one. It's going to be a lot of fun. And the Storabon Adoption Fund is firing on all cylinders, having paved a path for developers and builders to step further into their Storabon journeys with each engagement. Again, more on this in a bit, but one highlight from this quarter definitely had to be seen: 184 submissions and $3.2 million worth of lumens awarded through the Stellar Community Fund.
Now I'd like to show you this clip from Emerging Crypto, where we're going to hear from the Vice President of Partnerships at Stellar, Mark Hainan, speak on opportunities and challenges from transitioning from cash to a digital economy.
One of the biggest opportunities is really economic growth. So there are a couple of ways to think about this. So one way to achieve economic growth is just lower the cost of having access to financial services. So, people do use some level of financial service everywhere. You can consider cash to be the ultimate interoperable technology, and people use cash everywhere in the world. Now, ultimately, if they don't have a way to digitize that or store it in a bank account, or if it's very expensive to store in a bank account, they may store it somewhere else, and that comes at a cost. It comes at a hard cost if bank accounts are expensive, or at a indirect or soft cost if they're storing it in their house, or if there's security costs. Now, I think if we lower that cost by digitizing cash, by enabling people to cash in and hold digital assets in a wallet and then be able to send those very easily, that's a very significant thing for people to spur economic growth. That includes cross-border payments, which is another use case that's popular on the Stellar network. If we can lower that cost down from 6% to 3% to 2%, I think that's really exciting because then people can actually have more money left over to spend and spur economic growth. I would say on top of that, if we make it easier for people to borrow, that's another multiplier for economic growth. And that could include using lending protocols on Storabon to borrow and collateralizing a small portion of their balances. It could include any number of other things, using the blockchain for underwriting. And so that's exciting. And then I think, most importantly, I think our cash out network is very strategic for enabling economic growth. You were mentioning the fact it could seem complicated for people to get going with a wallet, understanding how it uses, even if it's a effectively a free transaction, and if there's a reason economically why someone might want to start using a wallet to enable free transactions, it might seem daunting for someone to then download a wallet and start using it. And one way we've resolved this is by enabling cash outs and by enabling something we call the Stellar Disbursement Platform, which is a platform that is currently being used by UNHCR and IRC and a number of other aid organizations to disperse aid. Now, the idea of this platform is actually to disperse to people who don't necessarily need to know anything about Stellar, anything about crypto, or anything about digital wallets. The user experience on their side is very simple. They get a text message saying they have aid available and they need to download an app to retrieve that aid. When they retrieve the aid, it comes in USDC. From their perspective, it's a US dollar equivalent balance. And then they can cash out at a MoneyGram. And they can also, in some cases, if the aid organization is game, they can send it to other people as well to help other people in their family as well through the digital wallet. I think for most people, it's going to be a similar experience to mobile money or other really simple, financial tools that are digital, in that they can actually start using it immediately. It's easy to understand. All you need to do to get started with it is add in your date of birth and your email address and your phone number, and you can get started right away. And by really focusing on the UI, making it as simple as possible, we are enabling a whole new set of people to start using this. And then you also have to build an incentive. People want to actually learn this in order to get access to the funds that are due to them. So I think cash out is something that is sort of the next frontier of crypto. And especially when you think of creators, Airbnb hosts, any other number of people that are, operating globally, Uber drivers, they all want to have digital cash out. And right now they may be actually working with very high cost systems for the purpose of cash out, especially cross-border cash out. And on Stellar, 100,000 transactions cost 1 cent. And so it's ultimately a much better system for that.
The world is full of tensions, all simultaneously pulling on the fabric of our financial system.
Hola, Ma. ¿Todo bien? ¿Qué pasa?
Mira, estoy acá afuera del banco, del cajero electrónico. Ah, pero está cerrado. ¡Qué porquería! ¡Qué porquería! ¿Pero qué están haciendo? Déjenme pasar, que necesito sacar dinero.
L'avertissement intervient après que plusieurs rapports ont fait surface sur des voyageurs qui se font voler de force leur argent à des barrages.
That is exactly where we see change peering through. Change that is powered by those who have the skills to create it. Change that includes the unincluded. A change that enables all the financial world has to offer to anyone, anywhere. Driven by technology that helps people to truly own what is theirs.
De l'argent pour mon téléphone, s'il te plaît.
Combien?
Le tout.
We are the bridge builders, connecting those who seek opportunities to those who dare to create
Les
them.
réfugiés n'ont pas de smartphone, on est d'accord. On les imprimante plutôt sur ces téléphones. Vous en pensez quoi?
Our calling is to create tools for doing good by doing well.
Ma, no te preocupes. Yo te mando plata.
And doing well by doing good.
Ah, gracias, hija.
Mais sont entrés dans le camp avec l'intention délibérée d'intimider et de voler de l'argent, prenant les dernières épargnes de ceux qu'ils ont plus besoin.
And bridge technical and physical borders with technology for real-world problems. Look, see the opportunities. We just need a way to bridge the obstacles, to create a more just world by acknowledging that everyone is valuable and empower local solutions to solve local problems. The Stellar Network, a universe of opportunity.